Hi everyone, it's Sarah here with Ratefair. Our topic today is on separation and divorce. And although it's not the easiest topic to discuss, it is what we believe is a very important one, and it is a reality for a lot of people. So the best thing to do is to be prepared and know what your options are with your mortgage. So first, and one of the most important steps would be to make sure that you get a legal separation or divorce agreement in place. Making sure that you have your own lawyers on either side to have your best interest in mind, because lenders are going to require this legal document before they are able to lend you any money. Once you have that legal agreement in place, you can then go over your mortgage options. Today we're going to be going over 4 options for you. First one being you can keep everything the same. Maybe one person is moving out, but nothing has changed on the mortgage. Maybe one person is now going to be paying for that property. Second would be you can do a refinance, or what we call a spousal buyout, to pay that other party out. Third would be an assumption of the mortgage, and fourth would be selling your property. So back to the first option of both parties staying on the mortgage, staying on the title, keeping things the same. Maybe that one person moves out and the other is responsible for paying the mortgage. However, this is the most risky option out of all 4 that we will be discussing, because you are still liable for that property, and maybe you do have that good relationship still where you do trust the other person. You never know what's going to happen, and we have seen a lot of things where it has affected people's credit bureaus, and it affects you for a long time and could affect you getting future lending for a house. So definitely keep this in mind, that this is a possibility that could happen if you do choose this option. So another option would be to refinance your property, where you would be taking that one person off the mortgage and you would be taking equity out of the home to pay them out. So typically a refinance, you can take up to 80% of the value of your home out, making sure that if there's an existing mortgage, you have enough to pay that mortgage out, as well as enough to pay the other person as well. If there isn't enough equity, then you can also do what is called a spousal buyout, where you could go through one of the insurers in Canada, and it's basically treated like a sale, a private sale, and you can go up to 95% loan to value of that property. So there would probably be enough there to pay that other person out, and then you would be the sole person left on the mortgage. So this can be a great option for people looking to do that. A third option would be what we call an assumption of the mortgage. So this is where nothing's changing with the amount of the mortgage and you're not having to pay the other person out. You're just going to assume that existing mortgage. So you basically just have to make sure that you can qualify for that mortgage on your own with your own income, credit, and any other qualifying guidelines needed. And typically you're going to need some documentation, so I would talk to your lawyer. I believe it's called a quitclaim deed for the other person that's going to be coming off that mortgage. So definitely good to have your own legal advice. And the fourth option would be to sell your property. So you could sell it, and if there's a mortgage on there, you would pay out that existing mortgage, and then you could split the proceeds or split it however you have it worked out in your separation or divorce agreement. And that's it for our mortgage options. If you are having to go through a separation or a divorce, please check out our blog posts on this topic as well on our website at Ratefair.ca. And if you do have any questions, always feel free to reach out. You can contact us, you can call us, text us, email us, or reach out on our website. We'd love to hear from you guys and give you some guidance on this topic. Hopefully this video was informational, and if you want, please subscribe to our YouTube channel and sign up for notifications to see our next videos. Thanks.